Hey, I want to get back to these markets because hashtag CP effect is in effect right now. We're just got near, I guess, the highs of the session. Let's bring in Mark Grant. He's the chief global strategist of Riley FBR, Friedman Billings Riley. Hey, let's talk about this market here, the last three sessions. Is it telling you anything or does it not matter as much since a lot of people are away?
I think, well, we've seen certainly in the equity market very light volumes, but I think it's telling you that it's the way it's trading, that there's a big concern about volatility here. And with the market jumping around, nobody knows quite what to do. I speak frequently with some of the biggest money managers in the country and the world, and they have expressed some concern. But also remember, while you focus on the equity markets, the bond markets, corporate bonds and so forth, have widened out versus treasuries, and this is also causing some issues for the larger money managers.
What's the risk there for the audience? What are you suggesting? What could the worst possible risk be from those indicators?
In my opinion, the worst possible risk is that the Democrats, when they get control of the House, are going to try to impeach President Trump, which I think would throw the markets into an absolute turmoil. You know,
on midterm election day, I might have said maybe that doesn't happen, but since then, the vitriolic nature, you may have a point here, and a lot of people do point that this market has not been the same since those midterm results came rolling in and the Dems took the House back. From a fundamental point of view, though, are you as concerned as some think the market is suggesting we should be? Do you see recession around the corner?
I think the only reason we would get any kind of recession is if the Fed keeps making wrong-headed decisions. I think they made a very poor decision to raise rates last time. I think they should back off from this. There's no normal. You know, when you talk about, these guys talk about normal, there's been no normal in 10 years since the Lehman bankruptcy and the financial debacle of 2008 and 9. So how can you go back to something that didn't exist? I mean, I just think what the Fed is doing here is very poor decision-making. And I hope that Chairman Powell does meet with President Trump. As you know, the Fed was made by Congress in 1913, the Federal Reserve Act. And sure, they're independent. They have 14-year terms. But they're a part of the government, and why shouldn't the head of the Fed meet with the president?
Well, they should be held accountable, and I think you know, politically they should even want to be held even more accountable for their actions. You know, when I heard Jay Powell acknowledge in that Dallas speech, Q&A, that they're not sure what their actions are going to, the impact will be 18 to 24 months from now. Essentially, you're saying it's a shot in the dark, and to your point, based on sort of old historic playbooks, that may not be in effect. I mean, inflation in the 70s, I don't know if we ever get there again, but we're nowhere near that right now. Mark, before I let you go, where are you looking for potential opportunities as we go into next year?
I think there are two places that I think will do well going into next year. One, I think there are a number of closed-end funds that pay monthly that have double-digit yields that I think are quite attractive. And the second area, if you want to play for appreciation, I think tower companies, the companies tied into 5G, the telephone companies are going to be very attractive as 5G rolls out, and they could be big winners.
We had a guest a week ago who liked American Tower. Mark, Happy New Year. Thank you very much. We'll see you again soon.